Wow, it kind of sounds quiet in here without lo-fi beats. We need like a little beatboxing or something. There we go. Thank you, lo-fi. Okay, now that I got my buffer music, we can get started. It feels so much smoother. Nice guitar there. Hi, everybody. Welcome to the December 7th Tokenomics chat. Hope everybody's doing well. It's another eventful week in ShapeShift land, having some cool listings on exchanges, a lot of other stuff going on. It feels like that the pace of development and just progress is accelerating, which is so cool. So I posted the agenda in the chat. We can jump right in here. So yeah, in terms of, just to reiterate, you guys are probably aware, but the centralized exchanges are starting to embrace ShapeShift. Coinbase Pro added Fox. The deposits started last night, and trading began today on the exchange. And then, kind of in a classic follow the leader type of thing, Huobi, I always mispronounce it, has added or will be adding Fox as well. And I think we'll probably see more centralized exchanges adding soon. So this has so many cool effects because there's going to be more liquidity in the system. There's more, I think to some extent it kind of legitimizes the project, certainly seeing it on something like Coinbase, which is a little bit awesome and surreal, having been at ShapeShift in the centralized days and like now having our token on Coinbase is really interesting. Also, like it opens the door to some potentially new cool arrangements. A great example is we were just talking to Index Coop, who does, they help do arrangements with like selling bed token and DPI, some of these fund tokens. And, they're talking about potentially, arrangements with market makers on Coinbase. These are people that have access to a lot of deep liquidity. And new things that wouldn't have been possible without the centralized route. So that is excellent. One thing I just added, it's something that's been in the back of my mind, but now it's popping up in the channels, in the tokenomics channels, and I think is definitely timely, especially as we start taking more positions and our treasury becomes more diverse. There's a strong need for a dashboard, just a really easy to read place where people can easily see, okay, not only what do we hold, you can go to Etherscan and see our current ERC treasury right now, and click around and maybe see our positions and different things, but like really being able to see, okay, what are we, what loans have we taken out? Where's what's our collateralization ratio? What is our overall presence in the DeFi space? Where are the risks? What's the current returns? Just a nice, quick to understand way of viewing all this. Really, the Fox economy. It's something that, of course, we have the answers to this right now. Everything is on chain, but we lack a dashboard. So there have been multiple people stepping up with an interest in doing a dashboard. Miss, Ron, Al, to name a few. And this is sounds like a great way to get collaborating here in tokenomics on building something. So we'll be scheduling a meeting around that some point next week. So if you feel in a way like you're kind of flying blind with respect to the DAO's finances, just know this is a temporary issue, and we're going to solve it leveraging the capabilities and talents of some of the foxes right here. Let's check the chat. Cool. Yeah, and Ron, great point. There's also accounting related stuff with, and just in terms of budgets and payroll. Of course, we have Colony, but all this is like a little bit sometimes difficult to track. So anything along those lines, I think anything that makes this DAO more transparent is a huge win. Transparency is our superpower, one of our superpowers. Moving on to the next one is a discussion we were just having in the Treasury Management Committee. This relates to how Foxes will get paid in December, and it is December, so we need to figure this out. But as a reminder, the change that's being made this month is we will default to paying in a stable coin, currently USDC, unless you express an interest or a desire to be paid in Fox, in which case you'll get Fox. Your Workstream leader should have provided you with a tool to go about doing that. If you haven't seen that, please let them know. But the way that we tentatively, what we intend to do here is deposit Fox into our Fox and Friends raw refuse pool, withdraw Fei, and then convert that to USDC. So we were in the committee, we were discussing kind of the finer points of how much do we need to over collateralize by. There's a desire to add a lot of collateral, so we're protected against a big downturn, which this being crypto and us being a longer tail asset could certainly happen. But this will probably be going to vote shortly with the Treasury Committee. We're not talking about a huge amount of a loan right now in terms of that Fei. Basically half a million, perhaps a little bit more to cover some upcoming marketing expenses. But that's kind of what we're looking at. Let's see here. The next item is so kind of thinking beyond just our immediate payroll needs, and of course this will be something that pops up every month. The means we go about raising that stablecoin for payroll may change. That's an important distinction. One thing that was brought up for this month, one suggestion that Willie had, is perhaps leveraging one Fox. It didn't quite make sense this month for both liquidity reasons, also especially on XDAI, since we're paying on XDAI, there were some considerations there with liquidity. But moving forward, we're not married to this process of using Rari for payroll. And not married to USDC, but I do think USDC is the best, is maybe the lowest risk of all the various stable coins. And of course, it's very fungible on Coinbase for dirty fiat. In terms of diversification beyond just the need for payroll stables, the idea, and I would argue this is, and at least in my mind, this is the number one priority for the Tokenomics workstream, is to help us diversify or hedge against a protracted downtrend in Fox. Things look great right now, but things can change in a heartbeat as well. So, assuming our current burn rate and assuming something like a 18-month bear market, having like $9 or $10 million of a stable coin on the sidelines squirreled away would be a really good thing to have, and really help set us apart. I mentioned this last week, but a lot of DAOs, even though they know better, so many DAOs are not diversified at all, and they're taking on a huge risk by just holding their native token, because these things can just get obliterated in a bear market. We saw this with a lot of ICO projects that only held ETH, and then ETH went down by 95%, and they had a bad time. That's not going to be us. Of course, the devil's in the details. How do we go about getting that exposure? So along those lines, we just had a really interesting chat with the guys over at Index Coop. It was actually my first time meeting them. They're really cool. They totally get it, and they're huge fans of ShapeShift. Sounds like what we're doing has kind of inspired their project as well. So that's always good to hear. That we're just kind of serving as maybe inspiration for others. But specifically what we're talking about is they may be able to arrange some or line up some investors who would be purchasing 6 or 7 figure USD amounts of Fox at a nominal discount, 5, 10, 15%. In exchange for that, we would get one of the like the BED token, which is the Bitcoin, Ether, and DPI index, or a DPI, or perhaps a mix of that and stable coins. But regardless of what we get, if we got like BED, we would be able to quickly convert that into USDC or another stable coin without too much slippage. These are pretty deep markets. Ideally, we would just get USDC. Also, beyond that, this would be an easy way for us to start getting crypto, or I should say, non-stable coin exposure. So, it would be really nice for us to have exposure to Bitcoin and to Ether and things like that, some of those blue chips. So that's kind of a way to get that. Although it's worth noting that it's not quite the same as having Bitcoin or ETH. There's always some risk when you have a derivative token that represents these things. But that's the general idea. So what the Treasury Committee is going to do is kind of talk about what would be kind of what are we looking for in terms of discount, in terms of vesting period. That's another thing to stress is these would vest over a certain amount of time, so it's not like the investor would immediately be dumping Fox on the open market. So we will keep you guys apprised of that. Of course, that's not the only way to get diversify into stable coins. There's other methods as well, such as even taking out a bigger loan on Rari. We've also talked about like Olympus bonds, and there's always selling gradually into the open market in a way that doesn't impact price. So there's different ways to go about this, but we will keep you apprised. One thing on the next item I wanted to bring up, just because I think it's super cool, is being able to leverage ETH staking for the growth portion of our treasury. So not necessarily just hedging, but this is something that we are we're basically taking on some amount of risk for some amount of reward. The nice thing about ETH staking, and also really kind of staking in general, we have our Cosmos validator, is it's relatively lower risk because it's just protocol level risk, and it's it's steady returns. Granted, they're not like triple digit returns or maybe even double digit, but they're pretty good over the long run, I think. So this is something to keep in mind. Specifically, what got me thinking about this is Rocket Pool is live now. They just did a really good, interesting podcast. I think it was on Bankless, which you guys really you should listen to that like twice a week. Bankless is just killer. But the nice thing about Rocket Pool is it kind of works a bit like Lido in the sense that you buy this token that gives you exposure to staking rewards. So you can either like directly stake your ETH, or you just buy the token and then through rebasing, I believe it's rebasing, the rewards from staking accrue to you. Of course, the risk side of that is you are, if the validators that are taking your token happen to get slashed, you too will get slashed. So it kind of, you're not going to get the maximum reward that you would compared to say running your own validator, because slashing does happen. But overall, it seems like a good way to get that staking exposure without having a validator. Also, just like with Lido, there's definitely some smart contract risk. Rocket Pool is even though the protocol has been in development for a long time, like 4 or 5 years. They used to talk about this on Reddit back in the day. The protocol hasn't been live for that long, so arguably it's kind of in a shakedown period. You got to figure if there's any low-hanging fruit for hackers. It's probably they might take advantage of that sooner rather than later. But these are just some it's an example of like, okay, there's a lot of different options for us to grow our treasury in ways that are pretty favorable from a risk reward perspective. Another thing worth noting is this is super cool. But once the merge happens, and specifically that is when the Ethereum's consensus mechanism will be replaced with proof of stake. So we're going to move from proof of work to proof of stake. And this beacon chain that's already live will then be validating the actual network. So this will be a huge deal, for ETH, really for crypto in general. It's a big switch. And assuming it all goes well, it's likely that the APY, the money you're earning as a validator on the beacon chain will go up in ETH terms. And the reason is transaction fees will be, and also miner extracted value will be kind of accruing to validators. Of course, you also have, remember we have the fee burn as well. That's not changing. But I've seen some interesting arguments for or predictions that the APY on ETH staking could go, up to like 20% or something. So just looking forward to that. It's like maybe even more appealing. Yeah, if anybody wants to come into the Tokenomics channel and talk about staking, it's really fun to geek out on, especially with these new protocols too, like Rocket Pool. And that is kind of it for my spiel. Now that we're done with that, we had Willie. Willie has some thoughts about Angel Vaults and Success Token.
What's up, everybody? Oh yeah, I'm gonna want to do some screen sharing too. Giant Ken, thanks for posting a new Zoom. I'm pulling that up right now. If you want to follow along with the screen share, please pull up the Zoom. Post the link in stage chat again. Cool. So we have two exciting topics to talk about today. I think first, let's talk about these Angel Vaults, because I see we've got 37 aces in the audience as well. And we got in a little while too. Thank you guys all for coming to support. We got team members from Ichi to help talk about these Angel Vaults, and then in a little while from Uma to help talk about the Success Token. So let's start off by looking at these Angel Vaults. I accidentally did whiteboard. And 37 aces, if you're available to join me, I would appreciate your support. But yeah, so these Angel Vaults are a brand new thing from Ichi. They just launched it recently with the Uni Angel Vault, and that's been live for I think less than a week now. But so far, it's been working really well. The TLDR for these Angel Vaults is that basically the way it would work, and let me pull up my notes on this too. I think I put it in Notion. Oh yeah, sorry, I'm not sharing my Notion screen right now. Basically, the Angel Vaults will manage liquidity position on Uniswap v3. So the way it works is that anybody, either the DAO or token holders, could deposit 1 Fox into this vault. And then what the vault does, the Angel Liquidity Vault, is it manages a position on Uniswap v3. Basically, the problem that they're solving, this is the way that they described it, is kind of like a DeFi 3.0. So we're kind of jumping straight past 2.0. This is a way to both wean off of or replace liquidity mining, while also achieving protocol-owned liquidity, and doing it in a creative way that actually incentivizes more liquidity on the buy side versus the sell side. So right now, one of the problems with liquidity mining is that when you deposit into a pool on Uniswap v2, we're actually like incentivizing our token holders to put up Fox for sale, because they're putting up equal amounts of Ethereum and Fox. The Ethereum is below the price, so it's like effectively buy orders, and the Fox is above the price, so it's effectively sell orders. And what if instead we could incentivize token holders to put liquidity on the buy side? And I wonder if there's any good graphics for this. So that is a TLDR of this. And basically what the Angel Vaults achieve is enabling and incentivizing people to deposit liquidity on the buy side on Uniswap v3, because Uniswap v3 enables you to provide liquidity in ranges as opposed to on both sides of the curve. Here, I found my notes finally. Okay, I'm going to try sharing again. And it seems like a really, really novel way to do this. I'm excited about it. We got the rundown yesterday from Brian and from 37 Aces, and it seems like this could be as big as Olympus Pro or Tokenomic. It really does seem like quite a big evolution relative to traditional liquidity mining. And there's a couple ways if we decide to do this. There's a couple ways we could launch it. The DAO could basically deposit 1 Fox. We could also change our Olympus program or launch a new Olympus program to purchase Angel Vault tokens. So when you deposit 1 Fox into the Angel Vault, you get ERC20 tokens, like LP tokens that represent your share. We could also potentially do a farming program to incentivize users to do this. And the way it works is that 10% of the trading fees from the Angel Vault would also be routed to the ShapeShiftDAO treasury. So that's how we can kind of get some protocol on liquidity. And then the 80% of the trading fees go to the LPs. And they were explaining too that these trading fees can be really lucrative. So even without incentivizing it, we could expect double-digit APR for depositing into this 1 Fox vault just from the trading fees, because Uniswap v3 is more capital efficient. And from all the trading fees we'll get from having a pool paired with a stable coin, whereas currently most of our liquidity is paired with ETH. So I know that was probably a lot, and it wasn't the clearest overview of these Angel Vaults. I'm still kind of wrapping my head around them as well. But hopefully, 37 Aces, are you available to fill in any gaps or give a pitch for why ShapeShiftDAO should consider launching and potentially incentivizing a 1 Fox Angel Vault? Okay, I don't think he is available. How did we do there? You were on the call yesterday too. Does that make sense?
Yeah, I think it is a little bit hard to grok. I think if you're not familiar with kind of like the limitations of V3, there are some like really nice differences here. Incidentally, we were talking in the committee chat about how V3 generally hasn't been as profitable for users. And it seems like this is a way to really improve that, especially if you're sitting on a lot of liquidity like us.
Yeah, and I was really just impressed seeing the results from the 1 Uni vault. And it looks like we got 37 Aces up here, so I'll hand it over to him to give an overview. But basically, you can see the results of this with Ichi and with this 1 Uni vault. And recently with ShapeShift with Fox, we've seen it pump over $1 and then quickly come back down. We've seen these kind of like quote unquote pump and dumps happen a few times, and it's like there will be $5 million of volume on the first day, and price will go up 20 cents, and then there'll be $5 million of volume 2 days later, and the price will go down 20 cents. The cool thing about these Angel Vaults is that if we had that same market action, then we would see the price move upwards more easily because there's less sell liquidity above the price. And then we would see the price not go down nearly as much with the same amount of volume on both sides, basically, because there'd be a lot more buy liquidity. So, and then the cool thing with these Angel Vaults is that as the price moves up, the Angel Vault actually updates the 2 positions it has, the 1 Fox and the Fox position, to move that buy pressure up right below the price.
Yeah, can you hear me, Willie?
Hey, we can hear you now.
Yeah, cool. Yeah, so I mean, you did a great job summarizing it. I mean, I think just like you said, what it's designed to do is to protect against the downside. So you guys have done great with your liquidity program, and it works great in a bull market. But it leaves you exposed to the downside, just like Ken was talking about earlier. And so Angel Vaults is designed to protect that downside. I sent a tweet by Brian in the chat, and you can kind of look at that thread. One of the first things that it shows is, I mean, it just simply shows how our liquidity is spread out in the first screenshots, where if you were to try to buy or sell $500,000 worth of Ichi, because on Uniswap v3, the slippage that happens is essentially, let's see, I can't see the numbers here, 46% slippage on the purchase, but only negative 3.17% on the sell. And so again, on that crash that happened on Friday night across everyone, I mean, Ichi is extremely correlated to ETH like everything else. We were looking at a lot of different tokens that we're partners with, and everyone, was down between 20 to 30%, and Ichi had just a little bitty green tick. And so essentially, the vault was buying all the Ichi from all the other liquidity places that we have it, and it held strong. And then as ETH started to recover, it started to move back up. We just were able to move that Ichi that was purchased in that vault over. We moved it up to, and we created a limit sell order. So now we're making it available on the market as the market goes back up and the arbitrageurs move all our liquidity pools back up. And we simply also move the floor underneath the price up as the tokens go up as well. So yeah, it's a pretty cool system. And we kind of lucked out and got it set up the week before the crash, and it worked as it was designed. So I think we had an excellent use case unexpectedly right out of the gates.
Aces, pardon me if this was already explained in one of your articles, but how do you guys handle the challenge of managing these positions very dynamically in a market where, right when you want to be doing this, much like the crash, or especially in a really, giant downswing like we had in that May crash, where gas prices just get astronomical? What kind of challenges does that present for managing the system? And is it possible that these vaults could get caught in this sort of situation, similar to maybe Maker had on last year, where people aren't, or specifically the vault isn't able to manage those positions effectively because gas is so high?
Yeah, so I mean, yeah, that's a great question. I mean, we were actively changing the positions during the crash. We were just operating under just a very basic policy, as we want the floor underneath the price. And as the sell-off occurred, and actually, there actually wasn't a lot of sell-off. It was more like the sell-off on ETH. And the vault just was able to, as arbitrageurs came through the system, it just bought it up. Now, so obviously we can't predict price. If everything would have gone to zero, obviously the system collapses, but many of the systems collapse. But we, basically as the sell-off occurred, it was already sitting there primed with a bunch of liquidity to buy Ichi. And then as soon as everything started to settle back, we evaluated and we rebalanced, as we actually waited for it to come back up some, and then we rebalanced and spread out the Ichi. So the system doesn't automatically rebalance at the moment. We have been talking to Chainlink about having some abilities to do that. But right now we just have some very simple kind of rules and policies that help us determine how we want to create the two positions, the wall underneath the price, and then the limit sell above the price. I hope that answered your question. I mean, I guess we're still experimenting is a little part of the answer as well, but it did fairly well on a fairly large crash that we had over the weekend. It's been a while. We haven't seen a crash that big in several months.
Yeah, nothing like a good stress test to make everything a little bit more hardened, huh? Or prove it out.
So I have one question on this front, just after watching this, and it definitely seems interesting, although I definitely need to learn more. Why a one fox pool, I guess, is my question, or why not one fox? One of the things that I think would be most important for one fox would be to actually have USDC liquidity, to actually do incentivize one fox USDC to make it a more useful token so people can get in and out of it without having to do the redemption. That seems more important to me than a one fox pool, but maybe I'm missing something.
Yeah, so that's a great point. So one of the things that we met yesterday with Willie and a couple others is creating that liquidity pool for one fox and USDC. That's part of something that we want to get set up before the next round, where you could potentially use one fox for your payments. That's something that can be done with the one fox treasury. And we need, as the treasury managers, signers, we're discussing on getting that done. So that's a pretty straightforward task that we need to complete. we're putting some things into the treasury strategy to allow us to easily do that, to execute on that. And then as far as the one fox, so one fox is part of is kind of like the other side to the vault. So the one fox helps purchase fox, right? So it helps drive incentives and prices up. And then we simply put the one fox and fox vault together that can kind of bring onto the other side to create that cell protection. So they work in symphony together. They obviously could work without each other, but we've that's we with our experiment that's how we're doing it now, I guess.
Gotcha. That makes sense. So the idea is that the one Fox USDC pool would still happen in a different way, and this was above and beyond that.
Yes.
It seemed like it was being suggested instead of, so that makes more sense to me. Thanks.
Yep.
Cool. Yeah, I can see it making a lot of sense to do it with one Fox, but because obviously the whole purpose of the Angel Vault is to incentivize buy side liquidity. So that's why we want to pair it with Fox. We could do it with other tokens, right? But for a lot of reasons, it makes sense to do it with a stable coin because we'll get more ARB that way versus because currently a lot of the liquidity is paired with ETH. And Fox is pretty heavily correlated with ETH. And then also, to 37 Ace's point, to mint one Fox, you have to use 20% Fox. And what we've seen with that, minting one Fox encourages people to buy Fox to do that. And then furthermore, can you speak 37 Aces to how the when rebalancing and stuff, how the vault can basically, how the two can work in symphony, where as the vault ends up with more Fox or more one Fox, it can use that to rebalance itself.
Right. I mean, it's just another additive to creating protocol owned liquidity, right? So the protocol is capturing more Fox to mint one Fox. Then we're incentivizing people to supply one Fox, which is creating that floor against the Fox price, and it's going to the one Fox itself, like you said, is if you paired it with ETH or something else, the arbitrages aren't not going to come in there, so you're not going to be collecting as many fees. So we actually we're trying to calculate the IRR on only a few days. We're still trying to collect that data, and so we can show all that. But you do capture a decent amount of fees as well, which helps adding to more of that protocol owned liquidity.
Awesome. So I think this has been a pretty good overview. We got a couple options too that you guys had mentioned for how we could move forward with a program like this. Like there's a few different ways to basically kickstart the vault with some one Fox liquidity. We could either do an Olympus Pro program to purchase these Angel Vault tokens, basically, which would encourage people to go mint one Fox or eventually buy one Fox in the open market and then deposit it into the vault to get those vault tokens. We could do a farming program, which we're all familiar with, but instead of having it for the Uniswap V2 liquidity pool tokens, it'd be for these Angel Vault tokens. Or another option is just for the DAO to mint and deposit some one Fox itself to kind of kickstart the program. And those aren't mutually exclusive. We could also potentially do a combo of those. The recommendation from Ichi was to think about this current liquidity mining program and how much it's costing us, similar to what we did with this Fei Ondo last program. And then consider as this program comes to an end, should we maybe allocate a percentage of those farming rewards that we're currently using to incentivize Fox and ETH liquidity towards this Angel Vault? We're in a cool position. Basically, we're one of the first projects that has. I think it might even be the first project that's being kind of invited to explore this. And I do think it's the type of thing that once more projects figure out about this, there could be a long backlog of projects wanting to launch their own Angel Vault.
Yeah, to that point. So what we've done is we've realized there's actually a lot of interest. That's what we've been on a lot of calls the last couple of days now that we've proven this thing, and we're putting together like these cohorts of deployments of these vaults, and so we're trying to get the first cohort together by next Tuesday, and then launching a week later, and we're probably going to roll them out about I don't know. We're targeting 3 to 5 at a time. So things are happening relatively fast, obviously. Any questions you guys have, so we can get those answered and get you guys at the top of the list would be great.
Pause for questions. Any questions from the community or from Treasury Management Committee about this program? So it sounds like, Brian, we would need to know by like pretty quickly if we wanted to be part of this first cohort.
Yeah, I mean, obviously you guys are in great shape because you already have one Fox in place. I mean, that tremendously helps. But yeah, we're making decisions as they come to us. So we can continue the conversation, Willie. I mean, we talk, at least once a week. So, but I just wanted to give you guys an update of kind of like how rapidly things are moving on our side to get these out.
Awesome. I see John's comment is interested, doesn't quite fully understand it, which is understandable. It's a lot to digest, and we'd love to see some potential proposed plans. So maybe you, me, anyone else in the community who wants to contribute to this can kind of collaborate in each channel to get some more clarity on what the optimal kind of first proposal would look like, and then we can circulate that with the community and the Treasury Management Diversification Committee, and maybe even try and have a better idea around our appetite for this by the next One Fox call we have next week. Cool. Because I think that will help too, John, if we can get some more clarity on like exactly what we think the optimal first step here would look like.
Yeah, and also an understanding of like what's being proposed, like how much Fox, if we're going to be doing any sort of farming, how much, what would the DAOs? I mean, I actually kind of really like the idea of number 3, where the DAO mints and deposits some of its own One Fox, because that would actually give the DAO instant protocol owned liquidity versus having to acquire it versus the Olympus bond, kind of like what we did with Faye. So I think that's actually interesting. But yeah, it's all a breakdown of like, how does this get done? What is the treasury mechanisms to do that? What is the cost, etc.? Those are the things I'd need to evaluate.
Yeah, one of the things we talked about yesterday was, you're obviously already giving away liquidity rewards. And I think you guys, those are locked in, the amounts for another month or something like that. So potentially, moving those rewards over to something like this to incentivize your users to be liquidity providers with this with the vault is a potential. So a combination of those can also work.
Yeah, that could work, but just to be clear, the current farming program that we can't change goes. It goes like another 2.5 months, not a month.
Okay.
So it might not be. That might not be soon enough based on the timelines on here.
Awesome. Thanks for giving the great overview of this. I'm excited to put together some more plans on what this could look like and work with the community to see if we can make this happen. And on the note of number 3 of the DAO depositing some One Fox, that's a perfect segue to talk about the success token, because in order to mint One Fox, we would need some USDC. And the success token is a really compelling opportunity that could help the DAO get some stable coins in its coffers pretty soon. So I've got in a little while from the UMA team with me on stage. Thanks for joining us today. And yeah, I guess this is a conversation that started months ago, and we've got some updates on it. And in order to actually do something like this, we'll of course need either the community or the treasury management approval. And we've gotten some interest on the success token too. So as a reminder, success token is basically a way to sell or to raise funding from investors without immediately selling Fox, but rather by selling Fox at a future date, as well as an option for more Fox based on what the price of Fox is on that option expiry. It's pretty cool. The thought behind success tokens is that it really aligns incentives between investors and DAOs, because investors, especially VC investors, are mostly focused on maximum upside, getting the highest return they can. They're less concerned with protecting against downside. And when we looked at the range token was more of a better fit for investors that would be interested in protecting the downside. What we've seen is these VCs, they really want the max potential for number go up. And DAOs at the same time, DAOs also, we want number go up, and the cool thing about the success token is that we end up rather than giving away more tokens if the price is lower, which isn't necessarily in the DAO's best interest. The success token flips the table so that we're actually giving away more Fox tokens if the value goes up. And another cool thing about that is that it really aligns the interest with the VCs, who are now, they're interested in the price going up as well, and want to do what they can to support that so they can get the maximum upside. So we had initially looked at the success token. Let's see, it was September 22nd. It was the last time that we had updated these numbers. And since then, the Fox price has gone up quite a bit. So we met with Kevin from UMA last week to update the numbers to be more in line with the current Fox price. And Kevin gave me a little demo, a tutorial on how we can continue updating these prices as things move. And he gave me some guidance on how, with these investors we're talking to, how we can basically move this to a close. So we've talked to a couple investors so far. The first one that we talked to, OP Crypto Fund, they were interested and gave us a soft commitment for 200 to 300K, assuming the terms all look reasonable when we get to closing, and assuming that we fill out the rest of the round. We're talking to 0x Ventures. They are interested and want to follow up now that we have these prices updated to look at this again. And then we got a call scheduled with another group that Ocean introduced us to for next week. So we're getting some investor interest. So far, the meetings have been going really well. Now I need to figure out, okay, how do we actually close this, and how do we get community approval to actually move forward with this so that we can close it in the first place. And the advice from Kevin was basically to pick a closing date. As we're talking to these investors, we basically at some point we put a flag in the sand and we say, okay, let's say for example, December 21st, we're closing. And what we would do is we would pick a date 48 hours beforehand, and at that point, that's when we would figure out what the price is for this. So, the price, we're not quite sure what the price is going to do between now and the 18th, for example. And so basically, as we're having these conversations with the investors, we can just once we're pretty confident that we'll be able to fill out the round, we can pick a date and then take the TWAP, the total weighted average price of Fox for the prior week, and then use that as the price. So that was their advice for how we kind of move this to close and how we land on a final price for the success token. And here are kind of the latest numbers. So if we want to do the success token, first we need to agree that we want to do it, and then we need to decide what these parameters are. And there are just a handful of parameters that we need to set. So right now, obviously, one of these parameters is the price of the success token. And as mentioned, kind of the plan there is to just take the TWAP for the prior week, three days before closing, and use that as the price for the success token. Then the other big parameter that we need to decide on is the strike price. And basically what this is saying is that if the price is above this, then the option holders will be in the money. Their options will be worthwhile. If the price is below this, the options won't be worth anything. They won't be able to redeem extra Fox. But the investors will still get one Fox token basically at expiration date. And then the rest of this is basically you can put in an implied volatility, and that helps you kind of calculate the effective discount. And this is basically the same kind of calculation that the VCs might do to see what kind of discount they're getting. And so we can play around with these parameters, but these and the other big one is the expiration date. At which date do we want these options to expire? And that is a date that basically, whatever the price is on this expiration date, determines how many Fox tokens the investor gets. So I'm going to zoom into this chart right here. So these parameters, you can basically see we have the success token payout in USDC terms in this blue line, and the equivalent payout over here on this left axis. We have the success token. This is the token payout, this red line. So this is how many tokens the investor actually gets. And this makes it pretty clear that if the price is under 2 on expiration, they're just going to get that one token. But if the price is over $2 on expiration, you can see the investor gets more and more tokens, up to 2 tokens is kind of where it flattens out. So, and then this yellow line is just the native token without bonus, just the USDC Payout, and maybe in a little while you can help me understand. I'm forgetting what this line is all about.
For the payout?
Yeah, what's this yellow line? Native tokens outlook.
I would assume that would be what they're. I'm not looking at it because I'm on mobile, but I would assume that would be what the value is upon redemption. Or,
yes,
or is it how many tokens they get?
I think looking at it, this looks like it's just like the Fox token value without that bonus. Yeah, so this is okay. So this is what the investor would get if they just held the token, the Fox token, and didn't do the success token. And this blue line is like with the success token because they're actually getting that bonus as well, and it's the USDC value of it. So you can see like at a price of $3 at expiration, the investor will get 1.35 Fox tokens, and that will be worth about between $5 and $6.
Oh yeah, that chart's pretty cool once you understand what it's pointing at.
Yes, thank you guys for giving us like these tools to really easily put together this one pager. So I wanted to basically just kind of restart the conversation because we are getting some interest from these investors. I think, if things go well, I think we could potentially close this before the end of the year if we want to push for it and if we want to get the community or the team, the treasury management committee to approve this. But yeah, we'd need to settle on some of these parameters. And fortunately, we have in a little while here from the UMA team to help answer questions and give us some guidance. So hopefully that's a good overview. Yeah, in a little while. What else would you like to add?
Oh man, you covered it great. I don't know. Maybe just to point out that that it's really clear to everybody that should the value not exceed the strike price, then that second Fox token that it takes to collateralize each success token, right? Because each success token is fully collateralized by 2 Fox tokens. So then that Fox token would be reclaimed by the DAO. And should it fall short of, should it exceed the strike price, right? But not go all the way up to being worth a total of 2 Fox tokens, then whatever remainder of that collateral would also be reclaimed by the DAO. So it's really, you're right, it really is a win-win. And it removes that the downside protection that the range token was offering, which the VCs just don't seem to have any interest in. So that's the success token is really seems the most powerful way to go, and it really aligns incentives just incredibly well with the DAO and with selling tokens up front to collect US dollar coins now, and then you have the redemption later on at whatever point you decide upon in the future.
Super cool. And yeah, I can confirm, the investors that we have talked to about this, it really does capture their attention. They seem pretty interested in this so far. And it makes sense. And it's cool how it aligns incentives with the DAO. And I really get excited about the fact that these investors could actually now be incentivized to help do whatever they can to ensure that that strike price is in the money when expiration comes. So the way that this would work, basically, if we do decide to approve this, then UMA has these contracts that are all audited, and basically we would need to lock up that amount of Fox. So like at these numbers, if we were going to sell $2 million worth of these success tokens to get $2 million worth of USDC in the treasury, we would need to collateralize 4 million Fox. And that 4 million Fox, we'd only end up paying all that out. It looks like if the price, it would have to be over $11. I might need your help expanding the spreadsheet a little bit, but currently it goes up to $11. And in that scenario, the success token purchaser is getting 1.82 Fox, which to them would be worth $20. And 0.18 Fox will get returned to the DAO in that scenario. So yeah, you can kind of see it helps to jump into this spreadsheet. And you can kind of see at every single price, basically like how many tokens get sent to the investor, how many tokens of that collateral get returned to the DAO, and what is like the dollar value to the investor at that price based on the total amount of tokens they're receiving. All right.
Yeah, for sure. I think that it can only ever approach $2, or I'm sorry, a 2 Fox tokens, and but never quite get there, and not definitely not go over. So yeah, and it's fully collateralized all the way through for both the DAO and the investor.
Which is awesome. And that's a cool way to think about it. You know, it's like if you can imagine a year and a half into the future, which is where we currently have around when we have the expiration date. If Fox token price was $15, you know, would we be happy giving these strategic investors 2 Fox tokens? I think so, but ultimately, no, that's a question for the community and the Treasury Management Committee. So,
and another thing to point out, maybe to people who don't know the UMA protocol as well, is that should there be any kind of ad hoc event or dispute like during that time period, then we have a dispute mechanism with the Optimistic Oracle, and that would kick in the UMA governance program to make a decision on what it really should be.
That's awesome. Yeah, you guys have been, on that note, you guys have been crushing it. Really excited to see all the stuff coming out of UMA protocol and the new super humans. I don't know if you guys have heard, but UMA protocol is basically kind of spinning out this amazing community of superhumans that they've cultivated into a DAO. Congrats on that.
Hey, you know, and Kent is right too. You guys have been inspiring. You've inspired us, and I've taken a lot of your governance, like format or structure, and kind of like suggested and helped to implement it in our talks of creating our DAO. So thanks a lot. You guys are rad, and love what I see going on over here.
Thanks. In a little while, means so much coming from you guys.
That's great to hear. Yeah, one other thing along the lines of risk management, I just checked, and UMA is also listed on Nexus Mutual. So in a little while, that's one thing we've been talking about lately is you know, just in terms of us taking part in various protocols, always having the option to get insurance on those. So alongside, you know, the notion of having your governance process kick in with respect to kind of that optimistic approach, it's also nice to know that this is an option for us on Nexus as well.
Oh, that's cool to hear.
So, Ken, what do you think about this in community? What do you guys think about this success token? Are you guys interested in, you know, selling some of these success tokens and locking up some Fox as collateral to do so?
I personally feel like I need to get my head around it a little bit more. I was kind of privy to some of these initial discussions around success a few months ago, and it looks like it's really evolved and gotten more interesting. But yeah, I think absolutely it's something that we should chat about in tokenomics and within the DAO in general. It sounds super interesting.
Awesome. I'm seeing in the chat, John says he's pro. Professor McCarthy says he's pro. Yeah, and I think we have some interest on this. So if the community is in support of it, to kind of like at least align on some tentative themes. Aside from this, and then maybe we can agree on just like plan to pick a closing date in 72 hours before locking that price, and then we can really hit the pavement and try and shop this around with some investors and try and move towards a close, and maybe, you know, get approval from the community that if we get or from the committee that if we get the commitments and stuff, then we can move forward with this.
In a little while, Professor McCarthy, he's a member of our Treasury Committee. He has a really good question. Are there any examples of disputes that have made their way through the governance process already? Or is this sort of a framework that you have that hasn't actually had a chance to be implemented yet?
There haven't been any in the sense where like the community or the governing community had to like really meet and discuss and look at the data. Most of the disputes have just been like price relay disputes that I've seen, which are really pretty easy to just run a script and come up with a correct answer and then vote on it.
Awesome, thank you. One other thing to consider with these success tokens is we don't necessarily have to just sell them too. So, you know, basically the DAO is able to mint these success tokens just by locking up Fox as collateral, and then we get these new success tokens that we can really do whatever we want with, right? We can sell them, or we could, you know, reward them to contributors, or even potentially another thing that we're considering. And I want to be careful here because I don't want to leak any information, but I think it's okay for me to say that there is a large name in the crypto space that is interested in supporting the DAO and the development of Fox Chain, but either with development resources or potentially with funding. But one of the questions they had is they were like, can we get, if we were to do this, could we get some tokens basically so that there's some upside for us if Fox Chain works out? And M. Perklin, who started these convos and who connected us to this group, and I think we have a meeting with them coming up. We're scheduling a meeting to kind of talk to them about the success token, and we thought it could be a cool way to, instead of just like giving them some tokens, basically saying here's some success tokens, and we really think that your project can help us, maximize the value of Fox, and this is a cool way to just further align incentives as opposed to just giving you some Fox tokens. So I'm curious also to when the Tokenomics committee the Treasury Committee is basically considering selling this, if we could also maybe consider maybe minting some extras that we could, that we could have available to potentially use as a incentive or to use in other creative ways besides just selling them.
Yeah, that's a great example of how to think outside the box, in a way that would really benefit the DAO, and Fox Chain is such a cool concept. So yeah, there's definitely no shortage of interesting, cool things for the committee to look at.
No doubt, new cool things popping up every day, it seems.
Awesome.
Sure, I think if you guys did come to a yes, because it has to move kind of quickly if the price is ever changing, right? On a success token deal, then you could just easily form like a Discord working group with the engineers involved and like put you in touch with Rainus, and I think you guys probably could hammer it out like real quick and get it.
Good to know.
Poopster just had a cool creative idea for maybe even a success token liquidity pool. That's a pretty interesting idea and hadn't even occurred to me. So pretty cool. Yeah, once you start thinking outside of the box and thinking about how these money Legos can play together, lots of new possibilities emerge.
Thanks, guys. Appreciate the time today.
Hey, thanks for joining us. Really appreciate it. And thank you, Willie, for running those ideas by us. Both the each angel vaults and the success token are super interesting.
My pleasure. I'll go ahead and post these links too if anyone wants to take this pricing spreadsheet and play around with putting in some different parameters. Please do. You can copy it and plug in whatever parameters you want to see how it affects the chart.
Awesome. Thank you. And last but certainly not least, let's have John on stage here. John has a cool idea. John is never at a loss for creative ways to leverage our Fox that's sitting in the treasury, of which we have a lot. And he's going to tell us about another compelling idea he has.
Yeah, thanks, Ken. Yeah, far more ideas than time. So happy to have forums like this to shoot them out there. So I'll try to make this relatively fast because I know we're already kind of at the end of the hour. This will probably go slightly over, so if anyone has to go, no problem. But this idea is relatively simple. So I talked about this a little bit in the Tokenomics public channel. If anyone wants more context, yesterday you can scroll up and read a little bit about it. But now that we have a token reactor, we have a really cool opportunity, in my opinion. And so the idea behind this would be to quite simply take a large amount of Fox from the treasury, large amount in my mind being somewhere in the like $20 to $30 million worth of Fox range. I personally would go on the higher side for this, and deposit that into our Fox token reactor. What this would mean is that in a very, very immediate short term, that would kind of nuke our Fox APR, but only for probably some amount of seconds or a day or two max. Very quickly, because of the way the token reactor works, the toke voters would be heavily incentivized to vote it back up, rebalance it, and our APR would be back somewhere over 50, 55, even 60%. And what this would mean is that the treasury, by depositing in this range, so let's just say 30 million for a nice clean number we can use with, if we got 50% APR on $30 million in Fox, the Treasury would be making, well over $1 million worth of token revenue from this deposit every single month. So, I'll let you all do that math. That's like over $15 million a year at such a price. Obviously, those prices would change a little bit if Fox price changes or token price changes, but on more or less, you would be creating over $1 million of revenue per month for the DAO. The DAO could do things like, sell some of that token every month for stables and use those stables to fund all of its operations. Keep some of that token, keep accumulating token to use on future liquidity provisioning or liquidity directing through the Tokenomic that now is a great way to wean off liquidity mining incentives. And third, it could even take whatever's extra and sell some of that token to stables every month, further diversifying the treasury. So put another way is, if we did this and it worked out, it would actually basically make the DAO instantly profitable, fund the treasury or fund the DAO basically more or less indefinitely as long as those prices held up, and create this very cool stream of revenue that people like the Treasury Committee could do things with to both help diversify, help fund all the DAO's operations, etc. In my opinion, the major downside risk of this is the smart contract risk itself. Obviously, if something terrible happens to the Tokenomic reactor contract that we put this Fox into, that could be very bad. But I think it's still a measured risk, because even at, let's say, a level of like $30 million worth of Fox, even with the price of Fox down a little bit from its high over $1 today, we're still talking about over $300 million worth of Fox in the treasury, not even including the treasury's Sablier stream. So we'd be talking about risking maybe 10% of the active Fox in the treasury, but in exchange, we would basically get this huge revenue stream that is super useful in all these different ways I just mentioned. I don't think this is something that the Treasury Committee could do by itself. It's too large of an amount, and I wouldn't necessarily support the Treasury Committee making such a large decision, even though it could, but it would take all their allocation. I think this should be a governance proposal. So someone in the community would need to take up this idea and create a proposal around it. But I personally think it's a relative no-brainer, and personally, I think we should do it. But that's the long, the short, and the skinny of it.
And hey, John, in the context of SFox, this could get really cool. So we could take the revenue that we earn from the Tokenomic reactor. We could then sell it into stables. We could then use those stables to buy Fox on the open market, and then put Fox into the SFox pool, distributing those rewards to holders, if I'm not mistaken. Is that a potential avenue here?
No, that's a great point. I mean, yeah, the whole idea behind SFox is we could take any kind of revenue streams and basically reward people who stake their Fox in the SFox contract with additional Fox that way. So you're right, we could take, whatever portion that governance wants of that revenue stream every month, convert it into Fox, give that Fox to S stakers on top of whatever they're earning via their own deposits, and it would just boost that APR and also create that much more buyback liquidity every month. So yeah, that could be a really cool idea. I want to kind of separate them, just in the sense that SFox is kind of a different track, and we are working on that, and that's another one of the ideas I really want to see move forward. But this idea doesn't require, obviously, the creation of a new smart contract like SFox does. We could do this tomorrow. We can't do it tomorrow because we need a governance vote and it'll take a little time. But we could do this over the next few weeks if this went through governance. And just like that, the DAO would basically pay all of its operational expenses and be profitable and have further assets to diversify with. So to me, it just makes a lot of sense. And this is like one of the huge benefits we get from winning a token reactor. There's only a handful of projects that could even do this today, and Fox is one of them. And I'm kind of thinking, why wouldn't we do this?
Yeah, more revenue is always a good thing. Like you mentioned, it's just that smart contract risk is the only thing that really gives me pause, and would maybe make me shy away initially from a full like 30 million. That's 10% of our treasury at current values. But on the other hand, weighing the risk reward, it is pretty substantial. Having a million a month at current prices. So I think this is great. Maybe we can incubate this discussion in tokenomics, but I agree that this is certainly more of a DAO proposal thing. I mean, when we're talking about such a big chunk potentially, if it was more of an experiment, like, okay, let's try 3 million, that could fall under the Treasury Committee. But this is a a larger decision. For what it's worth, Nexus Mutual does not currently offer insurance on Tokenomic, but I can't imagine that that's going to be true much longer because Tokenimac's a pretty popular project. So maybe that will change. But I love the spirit of this, and I love I just love the raw numbers. It's very compelling.
Yeah, absolutely. Yeah, and I definitely agree with some of your points there. And there is risk, but just to kind of put that risk into perspective. So 10% of the current treasury is one way to think about it. But another way to think about it is that just via the treasury Sablier stream, the treasury could basically, at least at like, call it like 20 million and a little bit longer for 30 million. In 3 to 4 months, the treasury would be able to pay itself back that amount of Fox just via its Sablier. So another way to think about it is you're risking, say a quarter or 4 months, 1/3 of a year of the treasury's Sablier stream. In my opinion, for the amount of revenue we're talking about, that is a very worthwhile risk. That's my perspective.
Yeah, that does sound a little more manageable. There is also the likelihood, though, in the event of an attack, let's say an attacker, a malicious actor did wind up with 30 million worth of Fox, they would likely or potentially, just dump that on the open market and crater the price of Fox. Of course, you don't know for sure, but that's a kind of impact, a related impact that would really not be good for the DAO and holders, at least on a short-term basis. Something else to keep in mind.
Yep, no, that is definitely true. Although it's worth pointing out that risk remains just from having a token reactor anyway, or really any smart contract that holds a bunch of Fox. So, even if the DAO doesn't deposit a bunch, it's very possible through things like SFox or other users just seeing that great APR, like you already have projects with 100+ million in a token reactor. So if you get a bunch of money or a bunch of Fox in the token reactor, whether the treasury deposits it or not, you still have that risk. And that risk also assumes that the attacker can get it out and actually sell it. Another version of that risk is an attacker does something that either freezes the contract or basically makes it inaccessible, basically locks that Fox out. That would also be unfortunate, but it wouldn't be as disastrous as it being dumped on the open market.
Right. Kind of like a parody multi-sig sort of thing where the Fox is just locked there. That would be interesting. But yeah, hopefully nothing that would ever happen. But yeah, these are fun discussions to have, just weighing the risks and rewards. It's exactly what I think one of the strengths of our fledgling Treasury Committee, and also one of the things that I think I've seen a lot of people step up with thoughts along those lines, and just in the tokenomics Workstream. So I'm excited to get everybody else's input on this idea. I think it's wonderful. I think it's just a matter of defining the details of this. But what a great way to generate revenue.
Yep, that's all I got. Happy to keep the discussion going in tokenomics public, and I hope someone finds this interesting enough to move it forward as a proposal. So
Wonderful.
I think we can
Thanks,
start
John.
pretty fast. Yep, thanks, Ken.
Great. And with that, I'll wrap it up. Regarding the Treasury vote for the December payroll, if you Treasury peeps are listening, I suggest that we vote maybe tomorrow. This should give us enough time as an org to process everything and get that figured out. And again, guys, if you have any thoughts or ideas or questions, jump into the Public Tokenomics channel, and we're always down to chat. And as always, thanks for hanging out. Have a good night.